we're all just swimming in information these days, aren't we?
Definitely.
Especially with the economy. It's tough sometimes to cut through all the noise.
Yeah, to figure out what actually matters.
Exactly. So that's our mission today. We're going to take a deep dive into some, well, really fascinating sources. They've got some compelling economic warnings, some interesting insights. We've got stuff from big international bodies, domestic administrations.
Right. And we're going to try and pull out the most important bits for you, the listener.
Our sources, they include analysis from the Economic Collapse blog, and there's this interview with an economic insider.
Yeah, gives a pretty unique perspective on things, on recent events. Some surprising viewpoints in there, too.
Okay, let's unpack this then, because there's quite a bit to consider here.
Different angles, sometimes even conflicting ideas.
Right. And our job is to help you make sense of it all, or at least lay out the different arguments.
So, where do we start?
Right, so right off the bat, our sources point to a pretty major warning. This one's from the International Monetary Fund, the IMF.
Ah, yes, the IMF. What's the headline there?
Well, the key thing they're flagging is that the IMF slashed its global growth forecast.
Okay.
Not just once, but for the second time in only 3 months.
Wow, okay. So they're getting more pessimistic.
Seems that way. The new numbers are 3.5% growth worldwide for 2019 and 3.6% for 2020.
And how does that compare to before?
Well, that's the thing. It's a noticeable drop. 0.2 percentage points lower for 2019 and 0.1 lower for 2020 compared to their forecast just last October.
Not insignificant adjustments then. So the implication is more risk.
That's what the source suggests, an increased risk of a sharper decline in global growth.
Okay. And does the source get into why? What's driving this increased caution?
Yeah, here's where it gets really interesting. The sources connect this IMF warning to specific things happening around the world.
Like what? Any particular hotspots?
Well, let's look at the global picture they paint. China, for example.
Okay, China. Big player.
Huge. And they apparently just reported their first decrease in GDP growth in, well, the source says forever.
Wow, okay. That's kind of a big deal.
Yeah, and even President Xi Jinping is quoted warning about black swans or gray geese.
Which means unexpected shocks, basically.
Right.
Things you don't see coming easily.
Right. High impact, low probability events. And this economic insider we mentioned, they actually suggest the IMF's growth targets for China might still be too high.
Really? Too optimistic.
Yeah, they think China is likely heading into a pretty deep recession.
Oof. And that would affect, well, everyone, right?
That's the argument. It'll ripple out, affect every country.
A domino effect.
Yeah.
Okay, so China is a major concern. What else? Anywhere else?
Well, beyond China, the sources also mention Germany.
Germany, what about them?
The source flat out states Germany is going into a recession.
Okay, another major economy.
And France. Their manufacturing numbers are apparently down even farther than they thought.
Not great.
And then, of course, there's Britain. Brexit.
Described simply as a mess because of Brexit. So yeah, you put it all together.
It's a pretty gloomy international picture they're painting.
Exactly. Which makes the U.S. part of the story even more striking.
Right, because the source presents a completely different narrative for the United States, doesn't it?
Totally different. So we've got all this global gloom, but then the source points out the U.S. just reported its lowest jobless claim ever.
Lowest ever. Okay, that's a contrast.
And the perspective in the source, the interpretation, is that the current administration, Trump, is winning.
Winning how? In what sense?
By, according to this view, stopping the flow, the conveyor belt of America's wealth going to China, then to Germany.
Ah, the trade narrative.
Exactly. And that he's bringing the jobs back to the United States.
So the argument is, while the rest of the world struggles,
the U.S. will come out the best, least affected by, say, that potential China recession.
That's certainly a viewpoint, a very stark contrast to the global one. It really is. It's challenging to square those two pictures, you know?
Yeah.
Global warnings here, this kind of U.S. exceptionalism narrative there.
Yeah.
Now, let's pivot slightly. There was another warning flagged in our sources, but this one was domestic.
Okay. From who?
From the Trump administration itself, actually, about the government shutdown earlier that year.
Oh, right. The shutdown. What was the warning?
Well, Kevin Hassett, who was the chairman of the White House Council of Economic Advisors then, he told CNN something pretty stark.
Which was?
That the U.S. economy may not grow at all in the first quarter of 2019 if that shutdown went on any longer.
Zero growth. Wow.
He even conceded that zero GDP for the quarter was possible.
Okay, so That sounds like a serious concern, even from inside the administration.
It does, but here's the twist. That economic insider source we keep mentioning.
Yeah. What's their take?
Their perspective is that this whole shutdown worry was just noise.
Just noise. How come? I mean, 800,000 federal workers were affected, right?
Mm-hmm.
Furloughed, unpaid.
They were, and contractors too. But the insider's point is that Congress voted for back pay.
Ah, okay. So the money eventually got paid out.
Right. The money was appropriated. So their argument is any weakness you saw in Q1, maybe that zero per sheet of GDP Hassett worried about.
Yeah.
It's just a shift in time. It pushes activity into Q2.
So Q1 looks bad, but Q2 might get a boost. Maybe even hit like 4% growth because of the catch-up.
That's the idea presented. A temporary blip, not a fundamental economic hit.
Interesting. And what about the markets? Did they react to the shutdown?
Well, according to this source, the stock market totally ignored it.
Ignored it.
Yeah, apparently it even went up during the shutdown, which the source called unprecedented.
Huh. Okay. So from that perspective, the economic impact wasn't the real story.
Seems that way. And digging a bit deeper, the source also gets into the politics of it.
Oh, how so? Now remember, we're just reporting what the source says here.
Absolutely. We're not endorsing any view. The source frames the shutdown as, quote, a democratic ploy to make the administration look bad.
Okay,
Yeah.
a political interpretation.
Yeah. And it suggested the president was kind of strategically positioned to ignore House Democrats because of his control over things like trade, federal appointments, potentially future Supreme Court picks, basically operating on autopilot in some areas.
So viewing the shutdown through a political power lens.
Pretty much. The source also briefly mentioned broader global shifts away from socialism, supposedly, in places like Brazil, Venezuela, even Europe. But that was more of a side note.
Got it. So a mix of economic analysis and political commentary in that source.
Definitely. Which brings us back to the practical side. For you listening,
Mm-hmm.
with these global warnings, these domestic counter-narratives,
Yep.
how do you even begin to navigate this? What can you do?
Well, one really core point the source makes is a distinction.
Okay.
It says the economy and the stock market are two different things.
Right. They don't always move together.
Exactly.
Yeah.
And the view here is that the stock market is currently overvalued,
Overvalued,
You know.
implying
implying it's hit our highs and is due for a reset.
a reset, like a correction or something more.
The source describes it as a big shift, a shift from Wall Street back to Main Street,
Okay.
and also a shift from, quote, fake money to real money.
Fake money to real money. What does that mean in practice? If there's this reset coming, this shift, what's the advice? For personal finances, investments?
The specific advice given in the source is pretty direct.
Lay it on us.
Consider moving money out of things like FANG stocks.
FANGs, Facebook, Apple, Netflix, Google, right?
Yeah, those big tech names. And banking stocks, too.
Okay, move out of those. And into what?
Into metals and the miners.
Metals and miners, like gold.
Specifically
Specifically mentioned.
mentioned, yes. Copper, gold, and silver miners.
And the rationale for that, why metals?
Well, the source points out that countries like China, Russia, and India are all, quote, buying gold like it's going out of style.
Why would they be doing that?
Because, according to this analysis, their economies and their currencies are expected to, source says blow up, face significant challenges.
So gold is seen as a safe haven.
Seems to be the idea. And there's another warning tied to this.
Okay.
That when a trade deal with China eventually happens,
Yeah.
the U.S. dollar could also fall.
The dollar could fall.
Yeah,
Even with a trade deal.
that's the warning, which could leave people holding dollars unprotected.
So the strategy is about tangible assets, things less tied to potentially volatile currencies or overvalued stock markets.
Precisely. That seems to be the core recommendation.
Yeah.
And the source actually advises against focusing too much on the day-to-day news.
Really? Don't follow the news.
Well, it says Wall Street news and the Main Street news is, quote, designed to confuse you and get you scared.
Okay. So if you're not watching the news, what do you watch?
The advice is see what they're doing, not what they're saying.
Watch the actions, not the words. Whose actions?
The big money. The idea is to figure out where the significant capital is actually moving.
Yeah.
Trade with that flow.
Follow the big money.
Yeah. And this ties into the idea that governments worldwide are printing money to stay in power, essentially.
Okay. Quantitative easing, stimulus.
Right. And that, in turn, will lift the commodities up, metals included.
That's That's a really interesting framework, looking beyond the headlines to the underlying flows.
Hmm.
So to recap for everyone listening, we've done this deep dive. We looked at those dual warnings, IMF globally, the administration domestically, about the shutdown.
Right, and those really contrasting views. Global trouble versus U.S. resilience, according to one source.
Yeah, and then we explored these specific strategies for, personal financial protection and what looks like a pretty shifting landscape, moving towards commodities, watching the big money.
Yeah, I think what really comes through from pulling these sources together is that tension
Tension between what?
between the big macro-level forecasts, like from the IMF, and then the maybe more politically influenced or market-driven realities and narratives on the ground.
Right, and understanding that tension, that's maybe the key for you, the listener.
Could be. Understanding that disconnect might be crucial for navigating your own financial decisions.
So the big takeaway, maybe, distilled from all this, look past the noise. Try to see where the actual money is moving.
That seems to be the core message from that insider perspective, yeah. Don't just listen to what's being said, watch what's being done.
As the source puts it, the big money is moving in now.
Hmm.
So the final thought for you to maybe ponder on, the real challenge, and perhaps the opportunity, is figuring out how you identify and align with those powerful underlying movements. Maybe that's where the, quote, big gains are found.
Something to think about, definitely.